Yo, 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 yo. This is gonna be made the night before is Saturday, January 10th. Today I'm gonna go over a kind of like forward weekly analysis. I know you guys don't like when I look away, so let me just talk to you guys right here. So basically, what I'm gonna go over today is kind of like my weekly analysis for going into the week of what is it? January 11th, the week of January 11th. So January 11th, we're gonna be going over news for that. What days I'm gonna trade, what days I'm not gonna trade. Also, what days I am going to go live. So I'm gonna be going live on YouTube here. But if it's like shitty because there might be shitty Wi-Fi, I'm gonna be going to Mammoth with some of my boys. Gonna be out there for that entire weekend or that entire week. So everything will be alright. If you guys are not informed of what's going on, I'm going on a trip for 4 nights from the 12th to the 16th. In the PDF file, it'll tell you everything that's going on. I'm still going to be doing live trading, still going to be doing videos, still going to be answering your guys' questions, just no calls for that week. And also, I've extended the program up to 2 weeks because of that and because of the holidays. So, anyways, today we're going to be doing a weekly analysis going into the week of January 11th. Just forget the date again. And doing a backtesting session of the entire week of. What was last week? 4th, January 4th, the week of January 4th. So yeah, so the backtesting last week. So last week down around 2K, and yeah, pretty unprofitable break. Not a pretty good start to the year, but I do expect these next couple weeks to be good, really, really good. So it sucks that that was kind of the way we started the year, but we'll come back strong. So anyways, we're gonna be getting into the weekly analysis first. So opening up the charts here, I just put on Jazz, just so you guys can. I just like having Jazz just because I feel like puts you in kind of like a thinking mode and a focus mode. If you guys don't like it, just let me know. But basically, going over a kind of weekly analysis of what I want to see from the market. So going back, obviously, we're gonna be looking at the market 30 bars back. So right here. So right, hold up. That's gonna be right here. Let's put that bit right there. Okay, cool. So right there, that's how many bars we're going to be looking at. Now, obviously, we're going to be looking at all-time highs. That's where our marker is going to be for that. But as of right now, there's really like a couple things I'm just looking for. It's just relevant swings and how we're reacting off of those. So from Thursday, we kind of wicked into that and came up higher. So we closed above a previous high, and we are coming to that high of the week. So the high of the week was made on a Wednesday, so we have volatility resting within that range. And since we're kind of like closing through this previous day high on this candle, I do expect us to kind of come towards that. We may have a manipulation down, but we could also mark out the equilibrium of that. Another thing I'm looking for is kind of just how we react to this relevant high. So Monday is going to show us exactly what we need to see and how we react to it. So if we close below this, we'll probably target something down here. There's a couple of relevant swings here. So we have a bunch of liquidity resting down here. So we could just see whatever the market wants to give us, but I doubt we really come back to that range just because we've already shown a lot of friction between these ranges. We just swept it, had a retracement, and now we're closing above over here, and we're having an expansion. It's totally, completely invalidating a weekly profile that coincides with price action. So because we're doing that, and we have a very strong close above, also making this kind of fair value gap, I do expect us to be bullish on Monday. But again, I don't trade Mondays. I need an expansion candle. We need something like that. We also have, all-time highs resting above. So we'll see how Monday treats us. I do believe that we will close above this. So I believe we're going to be green for this next coming week, targeting all-time highs. So I do expect something like this to where Monday, maybe we come lower, come higher. Then Tuesday, retrace, come higher. And then we kind of just do something like this. I don't expect us to really come lower. There's really no reason to. I mean, if we want to come lower, we take out either these two lows. I don't think we'll come lower than that. But the lowest I think we'll go to is maybe that equilibrium line or those previous day lows. Or if there's a gap, maybe that. But I don't know. We'll see what Monday has to bring with us or has to offer. But that's kind of what I'm looking for. I'm kind of looking for kind of just like a solid uptrend, whether we come all the way lower to down here and then go up, right here and then go up. But whatever it is, this is what I'm anticipating. I'm anticipating bullish expansion, and I just want to see how we react to this level up here. If we close above it or wick away from it. So that's what I'm looking for. Another thing I just actually forgot is we kind of have an SMT, I do believe, on all-time highs for the S&P 500. So right here, we do have an SMT. Yeah, we do. Right here, there's a little bit of an SMT. So maybe we will go lower first. These are still relevant areas of the market that we are looking at. So of this SMT, we have an SMT at all-time highs as well, just because we are above that range. But all-time highs signifies pretty much bullish movement. So I still think that we go higher. We also have CSD within this range. If you guys saw that and noticed it before me, dope, cool. I love that. That means you're listening. If you guys identified that S&T before I put it down, dope, cool. That means you're listening. If you guys were able to come to the same conclusion, dope. I love that you guys are listening and paying attention. Let me just see. I don't have anything crazy on my Safari real quick, or like any information that y'all don't gotta see. All right, chilling. So we're right here going into the week. So Monday, no news, so we're not trading. Just going to see how Monday reacts to those relevant highs that I just previously showed you guys. Tuesday, we have CPI. I am going to be trading CPI, and I'm going to be trading when it comes out. Now, I'm not going to teach everybody the strategy yet. Only if you're in Class A, I will teach it, just because it is a pretty risky strategy, and you need to go through the motions first before you really learn this, because I don't really want you guys trying to go into the market, trying to catch something crazy. And just it's going to fuck up your psychology, because it's fucked up my psychology, and it took a minute to get out of that. So going into it, CPI, gonna be trading that. I expect that to be a super huge day. 5:30 we have PPI. I probably won't trade Wednesday. Wednesdays are usually my big good days, but pretty high impact news that is coming out. So PPI, maybe trading data highs, data lows. If we get a high get taken out and we don't take out the lows, I won't be trading higher. If we get a low taken out and we don't take out the highs first, not trading. Those highs and lows need to be taken out before I trade, just because my strategy coincides with expansions, and just having those volatile areas of the market don't really help with my strategy. If you want to trade a one-to-one to those lows or those highs, go ahead. I'm trying to catch super good expansions. 5:30 unemployment claims. That one's also pretty high impact news. And then Friday there's no news, and I will be trading that day. So all these days I will be trading. So Tuesday I'm catching that CPI movement. We may be also catching another expansion movement, but I doubt there will be an expansion, just because CPI is pretty high volatility. But if I see something one-to-one RR. 5:30, waiting for all data highs and lows to get taken out, and then maybe I'll trade. If not, if that doesn't happen and we have a clear expansion, I won't really trade. Thursday, unemployment claims. These are fine. It's a good trading day. Friday, good trading day. No news. That's fine. Fridays are usually no news, but Fridays are mostly kind of like my loser days. So we'll see how the market wants to treat us on Friday. But yeah, I will be trading the same. The only thing I would probably be aware of following into next week is probably just Wednesday, just because of data highs and lows from PPI, and maybe Friday. Friday and Wednesday are the only ones I'm iffy about, just because Friday's not usually my best day, and Wednesdays we have high impact news, and Wednesdays are usually my best day. So we'll see how the market wants to treat us next week. But yeah, that's kind of what I'm looking for. So Monday, no trade. Tuesday, catch CPI, maybe expansion move. If one-to-one RR, if at like second trade, that's it. 5:30, wait for data highs and lows to get taken out. One-to-one RR. If they don't, maybe, or don't trade. Thursday, trade like normal. Friday, trade like normal. Be careful. If you lose once, probably just get off. That's kind of like the rules I'm setting for myself. So yeah, that's kind of what I'm looking for from the news, and we'll get into the back testing. I do have to go right now, so I'm gonna stop this recording, but when I get back, we will get into that back testing. That'll be in like a couple seconds for you guys. All right, guys, I am back. Me and my girlfriend, we went out. We got some like a matcha blended from Bobaton, and then just a little food haul, and then I got a little sandwich. So, I need my straw, babe. Can you hand me the straw? It's up there. You have one right next to you too. Thank you. All right. So, basically what's going on, I already give you guys the weekly analysis, so yeah, all I need to do is give you guys the backtesting now. So let's do that. So my screen is actually frozen. 1 second, hold on. All right, fire, we're back. All right, so my screen is now updated, and we're just gonna do a little bit of a backtesting throughout last week. So last week I lost $2,000. That hurt. It's okay though. Coming back next week strong. So basically, let's go into it. So I'll give you guys if you guys want to go watch my other videos, I kind of go into it in the day on what I thought that day and what's going on. I don't really remember, but I do have it journaled and it's already as a video. So I hope that the music is not that loud. I kind of had this song stuck in my head for a minute, so we're listening to the Smashing Pumpkins. But yeah, let's go into replay mode. Let's go to select day 2 Wednesday, or actually we'll go Tuesday. Oh, that's fine. Wednesday's fine. All right, hold on. Wednesday, bang. All right, so this is Wednesday. This is Tuesday's candle. So basically, how I marked it out is when I do teach you guys the strategy, and I'm sure I told you guys this. I probably only briefly mentioned it. I didn't touch on the topic too much, but when we have kind of like 2 expansion candles going to the upside, the third candle is most likely going to be taking out the swing, just because of that bullish price action and what we've shown, especially when it's the beginning of the week. So we're definitely going to take out that relevant swing when we have a relevant swing above it. So, and we also closed above this relevant swing, so that's another kind of confluence that we can use as kind of like an expansion. We are tapped into this for value gap, so you could take a little bit of caution with that. I didn't, just because of what I've traded, but it was kind of Bun's like price action this day. So right here we have previous day highs. Since we already have our kind of invalidation point, we don't want to go anywhere. I mean, we already have our invalidation point. We don't want to go anywhere really near that, especially when we have a full expansion like that. So going to the 7 hour, we have the 3 p.m. and the 10 p.m. and now we're just waiting for the 7 a.m. And we kind of have like a second expansion right here. We kind of have a down close candle with a wicked out candle, so showing a push from this kind of consequent encroachment, so of this fair value gap right here. So just going into framing and everything, we have CISD, we also have a BPR that gets pushed through, we also have liquidity sweep. So there's a lot of things that we're looking at that show just a bunch of bullish confluences. So I was going into this day pretty bullish. So going to the 1 hour at 5 p.m. Let's go to that 5 p.m. Let me make that white. Okay, so 5 p.m., 2 a.m. I'm actually gonna put on jazz real quick in a momento. All right, banger. So going to this day 5 p.m. and then 2 a.m. for Asian session, and then 12 a.m. London session. So we already tapped out previous highs pre-market, so we took those out, and then we're reacting off of them. So wait, did we create those are previous day highs? Those are previous day's highs. Whoops. Okay, so we did take them out. We closed above them once market opened. Oh, that makes sense. Okay, cool. So we did wake above them, see a push lower. That's that 3 p.m. candle, or at 3, yeah, that 3 p.m. candle. And then going into it, we have 2 a.m. and that's 5 a.m. So we don't really have a London reversal off of this, and that's kind of what I wanted to see. Let me just get the full screen. So we don't really have a London reversal off of this, which is kind of what I wanted to see going into it, but we do get a tap into this unmitigated fair value gap, and we respect it, and we also have that close above it. And I don't like taking entries before pre-market, although this would have been a pretty good entry just because we tapped into that unmitigated fair value gap. It's within that 5 a.m. candle. So if you guys want to experiment with it, that'll be okay. I'm going to start experimenting with that soon. But when market opens at 6:15 or at 6:30, is that 6:15 candle. We're kind of like showing. Let me just put the opacity low on this real quick, just so it's not in our way, because this one does play out. So no London reversal, but we get tapped into an unmitigated fair value gap. We have a 15-minute close above that, and it's also a 5-minute close as well. If you want to get a better entry on that, we have this one. We get a close above it. We get this 3 p.m. Where's the 3-minute close? Get a 3-minute close right here. Stops below those lows. Pretty much the same thing. But yeah, this one ends up playing out. So going into market open, we kind of just boof pack to the upside, and that is just like, ugh, I don't really like when we have kind of like movements like that. But that's exactly why we wait for the market to open, and we just push up. So I'm waiting for a kind of 5-minute leg down, but then we push up, tap into those previous highs that we set, these relevant highs up here, and then we close above them, show reaction off of it, and we kind of, we could target these up here, but it is a little bit far. I mean, we do have a whole lot of low resistance liquidity resting on the downside, but going into the market, I was bullish, so I'm just going to go over kind of like my mindset for it. So we have a big push off of market open, so that already lets me know that it's not really that good. I want to see a push lower before we go higher. We see that push lower, so we get this kind of like wick down, so that's a pretty good wick. So I want to like see a good confirmation, so I mark out this level on the 5-minute, and then a 3-minute, and then we get this trade. So I go into trades, take my trade for 5, buy, stops at the low, 2RR, and this is my first trade. So we're already past, we're at 7 a.m. And just because we had that, I'm just like, okay, cool. Get that close, cool. And then I think we do get stopped out on this one for, I forgot how much. How much did we get stopped out on this one for? Yeah, we got stopped out. And then we have another one, because we get another big push down right here. So we have this level right here, and I think I get stopped out again. So yeah, I think, no, I didn't take that one. I forgot what I did, but I took 2 trades. It was probably something off of this and then something off of this, and I just got stopped out twice or whatever, because my stops were right here. So I got stopped out twice for around 500. I go over it in the video. I kind of forgot where I put my entries and shit, but I know it was 2 entries within there, and I only taking 2 trades. So this one ended up playing out, but it was choppy either way, and I didn't really want to take anything like that. So I already took my 2 trades, 2 losses, RIP. Then going into the next day, Thursday, let's see, we had this long ass wick, 330. No idea what that's from. Cannot tell you. But going to the daily, we get a big drop down, and that was expected because we wicked off of that. Our invalidation levels right there, and we have an inverse fair value gap, or we have a fair value gap that we can tap into as well as a previous day low. So going to that, we have a lot of just failure swings to the downside. But this is the ultimate failure swing right here that we can mark out as like our true relevant swing. So going to the 7-hour, this is kind of what we see. We see a bullish kind of setup right here. We do see a bullish setup, but this looks like a Thursday counter because we swept that. We already had 3 expansions. We have an inverse for value up to the upside from this candle right here. And then we have an instant sweep and then come down, inverse for value gap. And then we have a kind of like bullish setup right here for the 7-hour, but I'm not going to take that. I'm honestly just going to use this as my invalidation level because that's my change of state of delivery. So if we do close above that on our kind of like high time frame, which is our 1 hour, I'm going to kind of use that as my, I guess, buffer. If we're above here and then we see a close lower, then maybe I'll take that. But yeah, I'll mark that out. I don't really want to be above that. Kind of want to be below that range. So going into the 5 a.m., we come up, tap into this range, and I want to see this respect because 15-minute levels, I want to see respect. We have a high, and we also have a fair value gap. I want that to be respected because if it is respected, that's confirmation for my bias. So 5:45 going into the day, bang, 6:15. Coming lower, mark out that 15-minute candle. So if we close below it on market open, I'll know if we can take it. So right here, go bang. I think we instantly drop down. So this right here would have been an okay entry. Now the reason I didn't take it is because this wick threw me off because once we take it, we see a reaction from it, and I don't know if we're going to continue lower, even though everything is telling me we're going to continue lower, and because I took a loss on the previous day. So I wanted to be super sure, so I wanted to give myself waiting time. And if you would have taken that, you would have gotten a good risk to reward, which will be right here. So off market open, that would have hit perfectly, and then we get a move up. So this move up is kind of what I wanted to see, but since we had such displacement down, it already kind of invalidated. I should have not traded. So I want to go to a 5-minute level. I see this 5-minute level. It gets closed through right here. And then I take my trade to the downside. Stops at the highs, at the previous highs. And then target a 1 to 2 RR, which I shouldn't have. I should have de-risked, but I was kind of running on like a winner's fever. And I wanted to get my losses back. I haven't lost in a minute, so losing kind of felt like it's bitter taste in my mouth. So I followed my rules, I stuck to my strategy, but I broke one rule of de-risking and going to a 1 to 1 R if I were to trade on a day where we have this placement off open. So this came down and stopped me out. And then I try to get another fill for the same size after we get that sweep. Because, oh, what do we have up here? A 15-minute fair value gap. So I wanted to see a tap into that to come higher because that's what we made off of that level. So we have, oh, we actually had this, yeah. So we came up like this, and then I marked this out as my leg to enter off of. We get a close down below. I enter in off of this, and this was a good trade. This would have been a good trade if I targeted a 1 to 1. And I probably would have been break even on the day at the very least, because that would have hit. But price action was very slow and choppy. But that would have hit if I targeted that. Now I was targeting a 2 RR as well as these lows, and honestly, we didn't even come close to. We came very close actually getting to those lows, but we ended up just chopping up the rest of the day. And I got stopped out because I put my stops to this level right here instead of keeping it up there because I just wanted to get in and out of that trade. And I was out for $400 on that second trade and out for that first trade for $300. So that was like I think it was an $800 trade. Yeah, minus $800 trade. So 500, 800. I'm eating up these losses like nothing. Like it's crazy. So I was like, damn, like I lost twice in a row. That ain't happened in a minute. So I'm just like, fuck. But I hopped off the charts. This was super choppy conditions. Didn't really want to see anything else going into the next day, Friday. Shouldn't have traded Friday. So Friday going into it, the reason I traded this day was because one, wanted to get my losses back. Two, it was a Thursday counter. We had a weekly profile. We have an inverse fair value gap right here. The framework, we're showing everything. We're going off a relevant swing. We have SMTs at these highs right here. And I'm just like, yo, this is good. Yo, this is good. Yo, this is good. And we have previous day lows right here, resting well beneath those, or not SMTs. We have previous day lows just resting right here. We took out a significant high. We're showing displacement to the downside. Weekly profiles. I think, do we have daily profile? No real daily profile, but down candle first, takes out those 3 p.m. highs. We kind of close above it, showing a little bit of bullish confluence. We kind of have this high up here that we could probably see something if we get an invalidation. Where's the invalidation on this leg? Right here. So right there, going to 7 hour. We already wicked into it, so yeah, it's already looking a little bit iffy. Going into the 1 hour, we see these highs get wicked out of and then closed above, and a bunch of choppy price action just from the previous day because of this fair value gap. But we did take out those highs, but we are respecting this fair value gap, so just a little weird, just a little weird. But yeah, so let's go 5 p.m. marking out 5 p.m. Again, no London reversal. London reversals are super key for New York displacement. No London reversal. We have London lows, and then we have Asian lows. And these are kind of just like our failure swings. So I'll just mark these out. But yeah, we have London lows, and then we have Asian lows resting below. We're moving up. I kind of want to see us take out this high first to come lower. So going into it, bang, bang, bang. 5:30 comes out. Was that news? Did we have news this day? Let me double check. We did. We have non-farm employment. I forgot about that. So we did have news. We had news that day. 6:15, closed below. This right here, we took out these lows. We took out the data highs. And this is before market open. This is showing great displacement. If you took this right here, so the best kind of way you could enter in off a trade, data highs, target data lows, 5-minute key level, 3-minute close, stops above here, target a 2RR, partials here, and bang. And then we get a reversal. So that's kind of how I should have traded, and we had a bunch of pre-market movements in the market. So we see this kind of leg form, and I'm just like, yo, this is sick. So we get this little leg, and yeah, so we get this leg right here is what I'm looking at. We get that 3-minute close below this leg right there, and instantly get stopped out again. And this looked beautiful to me because we already took out these lows. We tapped into, I think it was a 15-minute. Yeah, we tapped into a 15-minute PD array, also a BPR, wicked away from it, 5-minute key level, 3-minute close, tap into, target a 2RR, and nothing happened. Got stopped out instantly. And I think this day, yeah, lost $1,000. Heavy risk on this one. I was up 1,200, and then I lost 1,000. So that just goes to show that you can never be too careful with these markets. And even when your A+ setup looks A+, sometimes it can fail. And it's just using discretion and risk management to be able and to stay on top of that. So, those are my trades. Not too proud of them. I did break a rule. I did lose a lot of fucking money this week. And I'm on a 3-lose streak right now. But I'm still just trying to keep my head up. So this is chill. We're going to come back to the next week strong. I do believe next week's going to be a really good week just because we have a lot of high impact news. And just because I am going to be a little bit more careful with how I trade. Because now I have the weekend to kind of calm down, analyze my thoughts, see what I was doing within the market, and just be like, okay, let's not do that. Let's get up from this, and we're going to be all right. So what I'm going to go into during the market is just being aware of this SMT right here. Understanding framework above all is what matters, and knowing that this SMT is just a little bit outside of the range to even be considered right now. So I'm just going to be looking at framework within these 30 bars because that's what's relevant to me. So right now, I'm going to be bullish going into the market. CPI comes out Tuesday. I'm going to be trading that. That should be a pretty good day. But yeah, honestly, it's just winner's fever. It's like you guys will understand when you guys learn and during trading that when you go on these like win streaks, and I was always trying to be careful of this, but when you guys go on these kind of win streaks and you see profit after profit after profit, um, you're just naturally going to believe and get a little bit more overconfident. You're going to get a little bit more careless. You're going to break a rule. And it's your job to be able to stay on top of that. So, as you know, I do go on win streaks, and I was on a win streak for about a month and a half. And that loss, it was like, damn, I lost that. Next day, damn, I lost that. Third day, I'm definitely gonna make it today. Damn, I lost that. And these win streaks do happen. Like shit happens like that. But just going to that next week, just being able not trying to revenge trade is just my main goal. So I'm not gonna revenge trade next week. Just gonna keep on playing out my model. Statistically, I don't get more than like 5 streaks of a loss. So I've never really went on a 5 streak loss, and with the strategy, I've never gone on a 3 streak loss. And the reason that did was because I broke my rules. So just being able to stay on top of that, being able to maximize your profit, minimize your losses, and keep your risk management in case these things happen, in case your psychology messes up, is super key. That's what I did. That's what I always am focused on. And this next week, I'm just going to be super dialed in on my psychology, making sure everything is all right, and we're going to get the shit back coming in strong. So that's kind of like, that's my weekly analysis. That's my weekly back testing. If you guys have any questions, if you guys want me to go over anything else, newsletter is coming out today when I post this. So if you guys do need anything else, comment, DM me, text me, whatever, and I got you. And other than that, I will see you guys later. I hope you guys have a good weekend. I hope you guys hang out with family, have good experiences, go out hiking, go touch grass, go get some sun, and stay off the charts. I will see y'all later.